Hello everyone, welcome back. About 18,000 cars are stuck in line in the US right now. In the last hour of the day, this stock went up 2%. I need to change the subject, bro. I'm still moving gears even though there aren't any gears around. Okay, the delay is now around 13,000 cars, just like in China. During these announcements over the past month, Tesla's stock has gone up a lot. This is because they now have regular revenue, right? It's great that they are changing the way they do business. During that time, the market value of the stock has also grown by $300 billion. Some people think they will always need to use Tesla's plugs to charge their electric cars, but they won't. Do you know why? But there is no longer a long wait to get a Tesla. This is the shortest wait time in years. They are giving away free supercharging for 3 years, which makes Tesla an ultimate product. It's becoming the most valuable thing. But I don't understand why. This is crazy. This isn't normal, people. Have you heard about how much Tesla's stock has gone up in the last 10 days? It has made a lot of bears scramble. People who have been very critical of Tesla, like Tim and Dan, should be looked at again to see how their views have changed as the company has continued to grow. Tim used to be very skeptical of Tesla, but now he's changed his mind. Dan, on the other hand, is still having a hard time with the stock's rapid rise. Next, we'll talk about Tesla's energy business, which is finally getting the attention it deserves. Morgan Stanley has updated its energy model, which suggests that Tesla Energy might be worth more than the automotive business. With new products like the MEAP pack and a lot more energy storage being put in place, Tesla Energy is about to change the way the market normally works. This video will teach you everything you need to know about Tesla's current market conditions and the growing energy sector. There is something for everyone in this movie, whether you are an experienced investor, a Tesla fan, or just someone looking for health and wellness tips. Don't forget to click like and subscribe on Tesla Stock News. Stay tuned for more interesting information. Let's start right away. A recent clip from CNBC showed how impressive Tesla's stock rise over the past 10 days has been. Before the video starts, it's important to note that Melissa Lee's facial movements often say a lot. Tim had a big change of heart. He used to be very critical of Tesla and said it would fail. He was known for shorting Tesla stock, but his bets didn't pay off. Now Dan Nathan of Risk Reversal Advisors has been brought in by CNBC. Nathan seems to get angry every time Tesla's stock goes up. It's possible that Dan's temper tantrums are caused by losing money when he shorts Tesla, but this is just a guess. His emotional responses make that seem likely. On the other hand, Melissa Lee's responses to Dan's pranks are priceless. Could she be enjoying Dan's pain in secret? Let's find out. The talk starts with Tesla's price going up, which raises the question of when those self-driving taxis will be on the streets. Tesla's stock fell to about $138 a few months ago, but now it's worth $262. Back then, owners were worried about getting cars, but they did look far enough ahead. The car industry goes through cycles, and recent problems with the supply chain and a lack of vehicles have made the market more volatile than usual. Long-term buyers don't get upset by short-term changes. If you're happy about Tesla's stock rise, you may be thinking about self-driving cars and other cool new technologies that will happen in the future. However, let's go back to when Elon Musk stole around $500 million. Some saw this as favoritism towards tsla over Tesla, which was not the case. It was actually a smart choice. The NVIDIA GPS that Tesla had bought couldn't be used until their facilities were ready, so it made sense to have them sent to tsla. This choice kept Tesla's bank sheet healthy and kept expensive hardware from sitting idle. Even though there were bad press, Tesla's plan was sound. The H100 NVIDIA chips are very important for making a network of robo-taxis, but they can't work until the facility is fully stocked. If Dan were fair, he'd see that not taking instant delivery was the smart thing to do. Bears have been taken off guard by the market, and short sellers have gone too far on Tesla. Recently, the company delivered more than expected, and their battery storage business, which had been going unnoticed, grew by 100%. Even though this isn't the first time Tesla has doubled its quarterly energy deployments, this sudden rise in storage is finally getting people's attention. Even though Rivian and Chinese EV companies are now in the race, Tesla has really solidified its place. Even so, Tesla is still the leader. Short sellers often push the price of the stock down, but it always goes back up, which costs investors a lot of money. Some Tesla short sellers may even enjoy these huge price jumps, according to a rumor. Does anyone agree or disagree with this? No matter what, betting against Tesla usually doesn't work out. Even though the stock could keep going up, it's currently in an overextended time. Some people say to sell now and wait for a better time to buy again later, hoping that the stock will go down. But with this plan, you'll have to pay capital gains taxes and hope the stock falls enough to make it worth your while. Tesla is very volatile, so it could go either way. However, with self-driving cars on the horizon, the risks are very high. If self-driving cars become popular, Tesla's value could go through the roof. Since so much is at stake, it might not be smart to take the risk of selling now. The story about Tesla is changing as more people see how big its energy storage business could really be. Elon Musk has said for a long time that Tesla Energy could grow to be as big as, or even bigger than its car business. Wall Street is starting to understand. Morgan Stanley has pointed out that Tesla's energy business has a lot of value. Generative AI is raising energy demand across generations, and Tesla's Q2 energy storage beat has made people more interested. In addition, Tesla's megafactory in Lathrop, California, which can make 10,000 megapacks a year, shows how big the company is willing to be. When a megafactory is fully utilized, it makes the same amount of money as selling 1,000,000 Teslas. This is an amazing example that shows how profitable the energy sector is. The story about Tesla is changing as Wall Street starts to take these things into account. Tesla isn't just seen as an automaker anymore. It's also seen as a big player in the energy market that could shake up traditional energy sectors. The company's innovation and size, along with its strategic focus on energy storage, put it in a good situation to take advantage of the growing need for energy solutions around the world. People are interested in Tesla's energy business in the same way that people might someday be interested in robo-taxis. Tesla could make a lot of money if its self-driving cars were used more and faster. Morgan Stanley has updated its energy predictions while lowering its car predictions. This shows that the company has a better understanding of Tesla's potential. It is important to keep in mind that when experts talk about market penetration, they mean the number of new cars sold, not the total number of cars on the road. Some people think that Morgan Stanley might be playing down their energy predictions so that they don't set an unrealistic price target for Tesla. They might be trying to keep their predictions fair so that they don't get laughed at. No matter what, investors are more interested in Tesla's energy business because of progress in AI and strong quarterly performance. Analysts have updated their Tesla energy model after recently learning a lot about Tesla's business. They'd have kept their $310 price goal the same. When these analysts updated energy estimates, just cancel out their lower EV adoption estimates for 2030, resulting in the exact same price goal to the cent. It's hard to believe them. It looks like they've changed their figures for cars to account for the rise in the energy business, which makes me doubt their method. Tesla's energy business is now worth $50 per share, up from $36 per share before. The number of battery electric cars in the U.S. has dropped from 25% to 20% because of rising protectionism in China and a rise in hybrid vehicles. So their prediction for Tesla car sales in 2030 has been cut from 6 million to 5.7 million. This means that their core value has dropped by $15 per share. Tesla Energy, which is mostly an energy storage company, has seen a slowdown in solar projects but a speed up in storage. The business of storing energy now brings in 95% of Tesla's energy income, and that number is projected to rise to 97% over time. The margin profile for this section is much higher than that of the automotive business. Elon Musk has said that Tesla Energy is their highest margin business. To give you an idea of how much a Megapack 2 XL costs, it's $1.4 million, which is about the same as selling 35 Teslas, but with a much bigger profit margin. Morgan Stanley says that the profit from a fully stocked megafactory in Lathrop, California, which can make 10,000 megapacks a year, is the same as the profit from selling 1 million Teslas. Investors are now thinking that Tesla Energy might be worth more than Tesla's car business because of this change in view. Morgan Stanley's clean tech expert says that Tesla's renewed focus on the energy business, along with its innovation, size, and growing brand loyalty, makes it a real threat to market leaders.